In this spreadsheet project, you're going to refine some of your great spreadsheet skills, but you're also going to learn something about taxes, something that everybody loves. What I have here is tax brackets, and we'll talk about how they're used here shortly. And everything over here is the user input. The user is going to input their income for the year and things called deductions and credits. And what's going to happen with this amount of input, you and your Excel spreadsheet knowledge are going to use these tax brackets to compute the tax bill. So this is the money that the taxpayer is going to send off to the IRS, and this is going to be their effective tax rate. So people have some misconceptions about taxes, and I think those are going to be fixed as you go through this project. Also, the definitions of these terms are written down here, but we'll also explain those as we go through this thing. Let's begin with what the tax calculation is not. People think that if you made $100,000, that would put you into the 24% tax bracket, which is true, but then they think, well, that's easy. You just take your $100,000, multiply it by the 24% tax bracket, and you get a $24,000 tax bill. Well, that is definitely not the case, but that's what many people think. So what I'm going to do here is bring you through the actual tax calculation for somebody who made $100,000, but for the purposes of what we're doing here, we're going to ignore tax deductions and tax credits, and we'll cover that on the next example. So basically, we're going to show you what's going on behind the scenes in the spreadsheet. When the spreadsheet says you earned $100,000, your tax bill is $17,000 or $17,025. By the way, when I did this, I ended up with $17,026, so there's a tiny rounding error in there somewhere, but that's no big deal. All right, so here's what you do. You take your $100,000 income and you go up to the tax brackets. And what this means is your first $9,950 of income is tax-free. So if you made $8,000 on the entire year, your tax would be zero because 0% times 8,000. But now you made $100,000, you can't jump straight to this part of the tax bracket. Now what you do is you say this: all the dollars I earned between $9,951 and $40,525, those dollars are taxed at 12%. So 12% times this amount of money, every dollar in that range, gives me $3,669 in my tax bill. But I still made more than $40,000 because I made $100,000. So now the next dollars, the $40,526 all the way up to the $86,375, any dollar I earned in that tax bracket is taxed at 22%. So 22% times all the dollars in there gives me another $10,000 plus that I'm going to add to this amount. So this is the amount of taxes that I'm paying based on my dollars earned in this range. This is the amount of taxes paid on the dollars earned in this range. Well, I made $100,000, so now I go on to this range, and all the dollars earned from $86,376 up to $100,000, because I didn't get up to $164,000. So all the dollars earned in this range are taxed at 24%, giving me this amount. Now I add my zero from the first tax bracket, this amount from the next one, this amount from the next one, and this smaller amount from this tax bracket. It all goes together to give me my total tax bill. And this is very different than just saying 24% times 100,000. It's called a graduated tax system. So the money earned in different levels is taxed at a different rate. So now we've switched to the whole thing. In the previous example, we had no tax deductions or tax credits, but I'm now going to switch that up into the example that we had at the beginning, where we do have an $8,000 tax deduction and a $50 tax credit. So It's important that you understand what those two items are. A tax deduction basically takes your income and reduces it by the amount of the deduction. So instead of having a $100,000 income for tax purposes, I have a $92,000 income. The $8,000 isn't money off of my tax bill, but it's money off of my income, which will lower my tax bill somewhat. The tax credit is literally money off of your tax bill. So once you compute your tax bill, then you subtract $50. So there's a big difference here. This is money off of your income. Then you go ahead and compute your taxes. This is money off of your tax bill. So when I go through this scenario, my $100,000 income minus my $8,000 deduction says I should work on a $92,000 income. So the $92,000, the adjusted income, is what I'm going to use in these brackets. Now it's going to be the same thing as before. That $92,000, the first $9,950 gets taxed at 0%. The next chunk of money gets taxed at 12%, the next chunk at 22%, and the final chunk at 24%. I'm just following the logic I showed you before from these tax brackets. So now my total bill is $15,106, which is slightly less than before because before I didn't have the deduction, so I was paying my taxes on a higher income. Then finally I have a $50 tax credit, and that comes off my bill. My $15,106 tax bill minus my $50 credit gives me my final tax bill. So this is my final tax. That's what I'm going to pay to the IRS. Based on my entire income of $100,000, I can find out that I'm paying about 15.1% effective tax rate. So the misconception people have is they say, okay, you earned $100,000 or even $92,000 after an adjustment, you must be paying 24% in taxes. That's not the way it works. And in fact, I end up paying a 15.1% effective tax rate. Now, the difficult part for you is how are you going to take all that information and then behind the scenes have the spreadsheet compute your tax bill? That's going to be a toughie, but you're an Excel spreadsheet veteran.